Hey, welcome back, family. Now, if you're waiting for mortgage rates to magically drop, let me stop you right there. It is not gonna happen, at least not for the next year. But don't panic, because in this video, I have some good news, some bad news, and a sprinkle of humor to help you get through it. All right, let's dive in. What's going on, everyone? To those of you new to the channel, I am Sir Ashley. I am a real estate advisor, and I help people move to the Carolinas, specifically the greater Charlotte region, on the day-to-day basis. I've helped thousands of people move here, so if you're thinking about buying, selling, or investing in the Carolinas, specifically the Charlotte region, be sure to reach out to my team and I. We would love to help you. And I make videos talking about the housing market in the Carolinas, so if that interests you, go ahead and hit that subscribe button. Now let's jump into it. You see, here's the deal. Back in January of 2021, mortgage rates hit an all-time low of 2.65%. That's right, 2.65%. You could finance a house for the price of a daily Starbucks habit. All right, maybe not that low, but your mortgage payment was ridiculously cheap. But let me tell you, those rates were like that one friend that always picks up the tab. It was nice, but it's not quite sustainable. Now, if you fast forward to today, now from 2.75 to almost 7% is like going from paying a Netflix subscription to suddenly having to buy a whole Blockbuster franchise. I remember in late 2020 when my own cousin, Desmond, he gave me a call. Hey cuz, I'm thinking about buying a house. And I said, do it now, because these rates won't last. And sure enough, Des didn't listen. Now every time he sees me, I just saw him for Thanksgiving, he was like, man, you were right. And I'm like, of course I was. Des, this is my job. This is what I do. Now, let's use this time right now to take a step back and look at what waiting actually cost people, the people that didn't buy earlier, and now rates are near 7%. Let's break it down. You see, if you financed a $450,000 home at, let's just say, 5.5% interest, your monthly payment for principal and interest would be about $2,500. But at 7%, that monthly payment jumps to just under $3,000. You see, that is a $440 difference every single month. And over 1 year, that's over $5,200 that you're paying extra because you decided to wait. And that's comparing a 5.5% interest rate to a 7% interest rate. Now just think, if you were able to get a 3% interest rate, what that difference would be. And that is like saving over $10,000 a year on your mortgage payment. And that difference, if we put it in perspective, that is basically a vacation to Europe could have gone on every single year that you're paying in the difference between those mortgage payments. But here's the kicker. If you want the same monthly payment at 7% as you would have had at 5.5%, you would need to negotiate a purchase price of that $450,000 home down to $385,000. And as we all know, most sellers are not trying to hear that. And if we're being realistic right now, sellers still have delusions of grandeur, because in their minds, they're still dreaming about those bidding wars from 2021 when people were throwing cash at them like it was the lottery. But to you buyers out there now, I have some good news for you. Or maybe it's bad news for sellers. Inventory levels in certain parts of the country are back to 2019 levels. That means more homes are sitting on the market, and sellers are going to have to deal with that. They're gonna have to do one of three things. One, lower the purchase price. Two, increase incentives, or a combination of those two. Or third, take their home off the market. And we have been seeing that. A lot of sellers have just taken their homes off the market because they did not get the price that they wanted. But you have those motivated sellers that will lower the price or give you concessions depending on how long it's been sitting on the market and how motivated they are. But as you know, some sellers are stubborn. And I've heard them, some of them are my clients. They're like, hey, we'll just wait to sell and try again in the spring because they don't want to reduce the price. And right now, buyers are not lining up to overpay for a home with 1970s wallpaper and a broken dishwasher. You know, like they were in 2021 and early 2022. Those days are long over. Now, here's what several experts are saying. They're saying that by mid-2025, we're talking about June, July, August, mortgage rates might drop below 6%. Now the key word is might. Some say rates could stay high unless there's a major crisis. And honestly, the last few years have taught us anything. Since COVID, we've been basically living in a permanent crisis mode. But let me tell you, even if rates drop by a percentage point or even two, will it be enough to stop home prices from correcting? Now, I'm not saying a crash. I don't believe there's gonna be a housing crash, but home prices correcting, probably not. Between rising property taxes, HOA fees, rising insurance costs, affordability is still an issue. And unless salaries starts climbing faster, we're gonna see two things. We're gonna see home prices begin to soften, especially in homes that are over the median price for that area. And we're also going to see smaller homes be built so they can be more affordable. And those affordable homes will have a lot of competition. And that may drive the price up. But here's my advice. Whether you're buying or selling, please be realistic. Buyers, please don't fall for that common mantra, date the rate, marry the house line. I heard it for over the past year, and personally, I don't like it. I don't like it at all, because we never know exactly what the economy is gonna do, and I want you comfortable with that mortgage payment, because yes, you can refinance later, but it can be expensive. However, if you are a past client of mine and thinking about refinancing, please reach out to me. I have several lenders that work with me that can refinance you for free. So please reach out to me if you are a past client. I can put you in contact with those lenders. And if home values drop, you might be stuck bringing cash to the table. Meaning if you want to refinance a home and the loan balance is $390, but it's worth $380, you may have to bring money to the table, $10,000, to refinance. Now to you sellers, please stop playing hard to get. If you need to sell, price your home for today's market, not for the market in 2021. Think of it like this. If Beyonce can adjust her tour set list, then you can adjust your asking price. You see, at the end of the day, the housing market is like a relationship. It's all about timing, compromising, and sometimes a little prayer. So whether you're buying, selling, or just browsing Zillow at 2 a.m., I'm guilty of it, stay informed, stay patient, and stay realistic. If you found this helpful, go ahead and hit that like button and share with a friend. And subscribe for more real estate updates. I am Sir Ashley, your real estate advisor. Thank you for watching. I will see you on the next one. Right now, you're gonna have to excuse me. I gotta call my cousin Dez and remind him that I'm always right.